First pillar of mortgage business, credit underwriting. At this stage, the file comes to credit workstation for underwriting the loan. In simple terms, credit underwriting in mortgage business primarily involves verifying or checking whether the applicant is creditworthy in the first place to give a loan, and the follow-up to that is whether he can be extended credit for the loan amount, tenure requested based on his income, age, and other factors. Credit is the first pillar of the retail mortgage lending. The outcome of this stage is in taking a decision to sanction the loan amount. It is important to note that the sanctioned loan amount may not be the final figure, as it has also to be approved by two more pillars, that is, legal and technical. That is why, in all cases, the sanctioned loan amount letter would read sanctioned subject to legal and technical. Once the loan gets approved, it moves to the next stage, that is, legal appraisal. If it is not approved, it gets stuck for further clarification or investigation, or gets rejected and files are returned to the client. Second pillar of mortgage business, legal appraisal. Legal appraisal is the second pillar of mortgage lending business. Here onwards, the complexity of the mortgage lending begins, as legal appraisal is not a requirement in any other retail lending products. Now, the customer is requested to submit ownership documents pertaining to the property. In this stage, the proposed property to be purchased is evaluated to get a confirmation on three aspects. Establish ownership of the present owner of the property. Transferability of the property from present owner to home loan customer. Possibility of creation of mortgage, or, in simple words, securing the interest of the lending institution. Having vetted by credit and legal, now the application form has to pass through the third stage, which is the technical appraisal. Let us get into understanding of technical appraisal. Third pillar of mortgage business, technical appraisal. In this stage, the civil engineer of the lending institution evaluates the property from the technical and valuation aspects to establish two things. The first is whether the property has been constructed as per the local government norms, and the second is to establish the value of the property that should be considered by the financial institution so that the right loan amount can be extended, securing the interest of the lending institution. Finally, after the technical approval, the credit consolidates the approvals and recommendation of legal, technical, and its own so that the final decision about the terms of loan like amount, term, ROI, and security for the loan can be finalized. On final acceptance of the terms of loan, the application moves to operations for documentation and preparation of check of the loan amount. Fourth pillar of mortgage business, operations. Operations is the backbone of any mortgage institution. The operations as a function have four major roles to play. They are 1. Verification of documents. 2. Documentation and safe custody of loan agreement and property papers. 3. Managing repayment cycle of the loan. 4. Post-disbursement services, or you may call it after-sales service in mortgage. Let us begin with the first role of verification of documents. This involves performing an important role of checker of all the process that the file has passed through. In some organizations, operations as a function commences its work right at the beginning of the process, that is, at login stage, to validate the customer documents like KYC, income documents, bank statements, and the application form submitted by the sales team. This is to confirm whether they are in order as per the norms of the company. It continues its role at each stage, consolidating the approvals. In some lending institutions, the role is played by credit, and at the end the operations conducts overall verification before handing over the check, as it has to take forward the customer in the loan cycle till the closure of the loan. The second important role is to oversee documentation and safe custody of the documents. It is important for you to know that in mortgage business, one has to be on top of everything, but more importantly on documentation, as in case of any litigation in future, documentation is crucial in the court of law. So, you understand the value that operations bring to the table. One of the additional role played by operations is to have safe custody of the documents. This involves shifting documents pertaining to the customer and the property to the storage vault for safe custody until the tenure of the loan. The third important role of operations is to manage repayment life cycle. Well, the role of operations continues as this relationship blossoms with the commencement of repayment of monthly installments. The repayment can happen by post-dated checks, standing instructions, ECS, and nudge. Repayment by cash is generally avoided by financial institutions. This is a mammoth exercise considering the number of banks that would be involved spread all over the country. The fourth component of the operations role can be put broadly as after-sales service. This includes a few activities. Some of them are 1. Replacement of PDCs or banking instructions or change mode of payment. 2. Issuing annual certificates to avail income tax benefits. 3. Interact for making part and full repayment of loan. 4. Issuing copy of property documents or outstanding loan amount certificate. Or 5. Issues relating to customer's death and many more.